Welcome back to Mining Stock Daily, everybody. We resume coverage here of the junior mining sector this Monday afternoon with an important update from Arizona Sonoran Copper and CEO Mr. George Ogilvie. George, welcome back to the podcast.
Hey, good morning, Trevor.
Yeah, it's good to see you. It's been an important day for Arizona Sonoran because you put out your updated resource estimate for, I guess you can say, the global project, which is, the Cactus Project, combining both Cactus with the stockpile and Park Salyer. I mean, it's been a lot of drilling at hand over the past few months here to get to this, and the numbers really are very good. Almost a 500,000 tons at a grade of 0.58% total copper for over 5 million pounds of copper in the measured and indicated. That's a conversion of 220% above what you had before, and then also in the total leachable is 357,000 tons, grading 0.62 for 4.5 billion pounds of copper and M&I. So, I was actually really pleased with this resource estimate here. In fact, I'm more pleased. I'm quite frankly surprised at how big it is. So George, just don't let me take all your talk. Tell us about what our key takeaways should be here.
Well, I mean, obviously the 4.4 billion pounds at 0.62 total soluble grade of copper is really the critical number here, because that's the number that's going to feed through into the pre-feasibility study. As your listeners and viewers will know, only a measured and indicated resource can feed through into a pre-feasibility and study and a bankable feasibility study. So with those type of numbers that we can work with and eventually into a mine plan and a financial and economic model, it bodes well for a much more robust production profile and longer life of mine compared to what we put out in the PEA, almost 2.5 years ago now.
Yeah. Give us a sense of where a majority of these added ounces were coming from, George.
Yeah, well, I mean, obviously, Park Salyer, as we've been saying all along, is a bit of a sort of a game changer for us. In totality now, with the M&I at Park Salyer, we should be looking at around about 2.9 billion pounds of copper. And the good news at that is that the in situ grade is still well over 1%. So I think today it's sitting around about 1.03% T-sol copper, which compares very favorably with 1.06 that we had before, and approximately 2.5 billion pounds. So there's been over 100% conversion effectively of the inferred resource at Park Salyer in leachable material over into the measured and indicated category, which is going to be substantial for the pre-feasibility study. Yeah. With respect to Cactus East, Cactus West and the stockpile, again, we saw a significant uplift there in the measured and indicated categories. And the grades are very much in line with what we reported previously, but Park Salyer really here is a differentiator.
Yeah, no, absolutely. And one of the things I had to kind of get my head wrapped around was the addition of the primary material in this resource update. I mean, you're adding on to that primary mineralization below, but you have not included that primary resource in any of your economics yet. Is this something you'll still stand by? I mean, obviously we're seeing the resource here in primary, but it will not be a part of the PFS. Is that still hold true?
Yeah, that still holds true. So, I mean, obviously in the primary M&I, we've got about 745 million pounds of copper, and then there's 900 million pounds of primary sulfide in the inferred category. So combined, it's about 1.65 billion pounds of copper in the primary sulfide, which will not be included within the pre-feasibility study. And the rationale for that is that based on the current technology, we would have to put in a flotation mill, create a concentrate. There'd obviously be a tailings facility associated with that, and then the concentrate would have to go into rail cars and be shipped off to a smelter somewhere. That's all doable, but it would increase the capital intensity of the project. And right now we want to focus in on the heap leach with an SXEW and keep the capital intensity and the capital number extremely low. Over and above, standard proven technology, of course, we do have an agreement with Rio Tinto and their Newton division. They have been experimenting with primary sulfides and the leaching of those using their Newton technology. Results that we put out 3 months ago were showing recoveries of between 60 to 80% of the copper using the Newton technology, and that was only after 75 to 150 days of leach time. By the end of the year, those columns will have been running in excess of 300 days. We suspect we will then put out additional results, and of course we're going to see the recoveries improve over and above the 62 to 80% that we previously reported on. So it's looking encouraging at this very early stage, but there's a lot more metallurgical test work to be done. And then bear in mind that the bulk of the primary sulfide that really we would want to go after is very much at the bottom of the open pit. And that's really where the 900 million pounds of copper in the inferred category is essentially sitting. And that would be low-hanging fruit for us if we mine the oxide in the enriched material as part of our base case plan that'll come out early next year. That needs to be drilled off into an indicated and potentially a measured resource. And that's going to take a further investment, likely in 2024.
How do you, other than adding more capital and resources to the project, you did mention that you'd be continuing decreasing your drill spacings to 38 meters for future studies, and I assume that would mean both obviously the technical studies and really converting those the resource to potentially reserves. I mean, are you going about this methodically in the way that the textbooks say you're supposed to do it?
Yeah, no, absolutely. Look, the measured and indicated drilling that we're reporting today, if that converts over into a mine plan, and we ultimately show in the financial and economic model that will be profitable, then a lot of that indicated material that we're reporting on today is going to move up into mineable reserves in the probable category. So an indicated resource can move into reserves in the probable category. Mm-hmm. The infill drilling that we're doing at the moment on Park Salyer and Cactus East and Cactus West earlier in the year was infill drilling to the measured category, and that's the 38 meter centers that you were talking about, which effectively is about 125 feet in imperial numbers. And that drilling is only required for the second half of 2024, when we will produce a bankable feasibility study at the end of that year. And any material that's in the measured category that makes it into the mine plan and is profitable would therefore be in mineable reserves, but in the proven category. So now that we have an idea of the mine scheduling and the mine sequencing of the assets, obviously it allows us to focus in on the first sort of 5 to 10 years of the mine plan to move that up into the measured category, because if we're going to do project financing on the project, and there obviously probably will be a portion of debt financing, the creditors always like to see, if there's going to be a 5 to 6 year payback on that debt with a 5 to 6 year tenure, then they like to be working with mineable reserves that are in the proven category. It just gives them more confidence in the drill data and the likelihood that they're going to see a return on their investment, with respect to the debt.
Yeah. Well, George, I mean, just as far as mine development, and listen, we work with a number of different companies in all different stages of exploration and development, but very rarely more times not than more times we don't get to this point to where we get to actually discuss moving to proven and probable down the road. And you've been in this business long enough to know not very many projects get to move to that type of conversion. Cycles are run against people, or the mineralization just simply isn't there, and therefore the capital market just isn't there to get to that point. And so just being able to have the discussion about the next round of drilling to get to that conversion of a reserve and having that on the table is more meaningful, even if at this point, if it's just a discussion, but at least it's the real deal, right?
Absolutely, Trevor. And the first quarter of next year is less than 2.5 months, let's say 12 weeks away. And at that point in time, we intend to come out with our pre-feasibility numbers. I mean, we've been guiding the market for the last 6+ months that we think a 45 to 50,000 ton per annum cathode producer with a mine life in excess of 25 years is definitely achievable. Now, if you think about that, and we work just with simple math, if we say 50,000 tons of cathode production per annum, that's 100 million pounds of cathode production per annum. If we multiply that by 25 years, we get 2.5 billion pounds of copper is actually produced. Of course, there's going to be metallurgical losses from recovery because we don't get 100% recovery. Let's say we get 80%, and then there's mining losses that occur. But if you work backwards from that number, it's going to give you somewhere between 3 to 3.5 billion pounds of copper would have to be mineable to produce that 2.5 billion pounds of actual cathode over 25 years. And of course, as we stated here this morning, there's actually 4.4 billion pounds that could potentially go into that mine plan. So I think at a 70 to 80% conversion, there's a high likelihood that the PFS is going to show 45 to 50,000 tons of cathode production and a mine life 25 years plus when it comes to market in the first quarter of next year, based on these numbers that we put out in this resource this morning.
One of the other very interesting pieces of data out of this morning's news release was your discovery cost. It's just at about a half a penny per pound. There's not very many copper projects in the world that can have a discovery cost that low.
No, for sure. I mean, obviously we have a little bit of an advantage here in that, it's a brownfield site. It had formerly been worked by Asarco. They had drilled Park Salier, walked away from it because they weren't interested in underground mining. They had drilled the northeast extension. We've hit mineralization there, which isn't even in this resource that we put out. And the mainspring, which is, part of Park Salier now to the south, if your viewers end up going and looking at the maps and diagrams, because now we have that as an option agreement, in this resource calculation, we're able to project some of our drill holes immediately on the property boundary over onto that property, which we couldn't do last September when we put a maiden resource out on Park Salier because we didn't have an option on the property at the time. So there's several 100 million pounds of copper there in the inferred category, which is in this resource, which will not go into the mine plan because it's an inferred resource. But we know from historical drilling that Asarco did many decades ago, there is mineralization at Mainspring, another 500 meters to the south. And we currently have a diamond drill on Mainspring as we speak. And there's currently a plan for potentially drilling up to 10 holes between now and probably the end of November. And where we're going with this is that we won't be able to build into the mine plan for the PFS, given it'll be no more than an inferred resource by early next year. But we will be able to talk about it in the opportunity section of the PFS itself. And we think this is probably going to form part of our major infill drilling program in 2024, because we think there's significantly more pounds of metal we can add on to the Park Salyer extension south that is going to be economically viable and will ultimately grow this resource above the 7.4 billion pounds that it now sits at today. And I've said on this show before that, with a little bit more money dedicated to exploration and drilling, we think we can grow this resource to in excess of 10 billion pounds of copper in the ground, all on private land in Arizona, with access to infrastructure, with water rights to the year 2070 and an abundance of water in the ground. That would be a world-class asset, by anybody's standards, and is going to be valued significantly more than what the company is valued at today.
Yeah. George, I've obviously been very critical of the price action in copper itself over the last majority of this year. And I do think it will take some sort of going through a recession or getting through whatever it is we're going to go through to really get a better understanding of copper's next big move higher. But as we're discussing, I keep on thinking in the back of my mind about the timing of all this. I mean, you have a timeline of what you're trying to do and when you want to put out the PFS, and then you also mentioned that bankable feasibility study later in 2024. And so, next year is going to be a huge year. But the timing of this all potentially, if I could put on my my macro hat and think about getting through some sort of recession, is it maybe sets up Arizona Sonoran and the Cactus Project pretty well for going into those later stage of development, final stages of permitting, financing, building, all that stuff. If you not that you're planning on it, but it just kind of falls in line with a better move with the copper price.
I think so, Trevor. I mean, obviously, timing in business is really everything, and I think we're going to get very fortunate here with this project, because if we can execute on that plan that you put forward, I mean, we'd be looking at construction and development early in 2025. It's currently showing an 18 to 24 month construction and development period. So assuming we start breaking ground in early 2025, we could see first copper cathode here before the end of 2026. So that's only 3 years away, and in mining terms for a copper project, that is an extremely short timeline. And
yes, it is.
When you look at most of the analysis going forward for supply and demand, it's usually from 2026 and beyond that you start to see major structural deficits and where the demand is going exponentially, and where there's going to be significant supply constraints. And we think we're going to be very well primed and timing the market perfectly. And let's also remember, in producing a grade A, LME grade A copper cathode, this will go right into the US domestic supply market. It's not going on a ship. It's not going to Asia to go to a smelter and be treated and processed. This will go right into, the fabricators, the electrical vehicle manufacturers, the wind turbine manufacturers, right in the US, who are going to be crying out for this, grade A LME copper cathode.
Yeah. All right, George. Well, congratulations on this outstanding report here with an updated mineral resource for the Cactus Project. There's going to be more to come. The next 18 months are just going to be filled with news out of Arizona Sonoran, and I look forward to reporting more of that news and talking to you frequently. George, thanks so much for your time.
Thank you, Trevor. Appreciate it.
All right, everybody, that's your update from Arizona Sonoran Copper. They do trade on the TSX with ASCU. They continue to be a supporter of the podcast. And that's a wrap here today. We'll be back tomorrow morning with the morning briefing, everybody. Have a wonderful evening. Be well.